it is about 10 to 15% higher in terms of our cost. So that is the kind of subsidies they have. Their selling price is offset by the subsidies. Their cost may be equal, but it is subsidized.
So I was just thinking, sir, maybe this is a wrong question, but I wanted to understand if Chinese glass is available at much cheaper cost in India than the production cost which you're incurring. So why go and produce the glass itself? Just procure the Chinese glass, put the label for Borosil Renewables and sell it to the customers.
You see, the thing is that under the WTO, plus if you look at the long-term intention of the government of India, the intention in the government, especially with the Prime Minister, very unequivocally, is that you have to make in India. And there are all kinds of geopolitical reasons why India wants to lessen the dominance of China in India's economy. And this morning I was in a conference call with the Honorable Ambassador of India to China, and he was repeating the same thing, that the government is very keen that India starts producing on our own soil the items that we need most. And it is very much in the focus of the government that India should manufacture everything that it needs on its own soil. So they will come up with, there are remedies available under WTO, the World Trade Organization, where it can be established that if there is any subsidy, then the WTO permits the government of the affected country to levy an anti-dumping duty on the imports of that product. And that is the route we are going to follow.
For the similar regions, what has been discussed, the government would not have levied any custom duty on import of modules and solar cell if the cost was only consideration, because the modules are now subjected to 44.5% duty. The government could have very well done their solar program without attracting this duty at a cheaper cost, and the domestic industry would not have even grown. So that is not the kind of logic you always follow in the working of any country. The domestic production is very important, and this is a very strategic sector, energy, security.
No, sir, I get that point. What I'm trying to understand is, till the time the things are not good, like it is not rosy for Borosil, so let's just procure the Chinese glass at cheaper cost. It will give us margins also, sell it in India to the players who are wanting that glass also. Let's do that part and keep everyone happy, like Borosil on the margin front and shareholders on the numbers side. So this is just a thought.
Yeah, you're right. But the problem is that if this import duty which is exempted is subject to actual user. So we are not actual user in that case. If we import and sell in the market, then the duty will be attracted, 15%. So it will no longer be cheaper goods for us and for our customers. So trading is not possible. If you were using captively for our own module production, then it was fine.
There's another issue. Under the laws of anti-dumping applications and so on, if we have imported a certain product in the past, on which we now are seeking anti-dumping duty, we are not even eligible to apply. So that's why we have to stay away from it. Otherwise, we cannot seek trade remedies afterwards.
Okay. That helps. I have another question, sir. So I have seen that the overseas acquisition which you have done, it has backfired to a great extent. You will believe it or not, that's a separate story, but I do believe that has backfired Borosil to a great extent. From the time we have acquired that subsidiary, so we are spending a lot of money for its maintenance. There are no numbers which are coming on that. And then we are being very hopeful of that giving us numbers in the future. So you see that there's a debt overhang which has come up as a part of that acquisition. Now we are raising funds to clear off that debt. Not sure what was the idea behind that acquisition at the wrong point of time. Can you throw some light there, please?
When we bought the company, they had made a margin of 17 million euros on sales of 60 million euros. In a country like Germany, to have that kind of a margin is unthinkable. So that is one. The second is, we had been shipping glass to Germany for many, many years, more than 12, 13 years. And this company has a very high reputation for very high quality. And it's a first-rate company. So when the previous owners wanted to sell it, they actually evaluated us also whether we were fit to run that company. And they said that you are very fit to run the company, and we agreed to buy it. At that time, these issues were not there. What we see is that beginning from July of 23, the Chinese have become particularly vicious, if that's the word to use, because they have dumped their prices like anything. And I think it is just a game they are playing to establish world domination on the production of energy from renewable sources. But again, there's a very strong countercurrent to that in Germany and in the European Union in its entirety. As you probably know already, in the United States, they have imposed a 50% import duty on imports of solar cells and modules from China. So they are really very strong in encouraging domestic production. Same story in Europe. It is because Germany is ruled by a coalition government. There are three parties to that, and we know how coalition governments work. It's taking a little time. But in the meantime, we are getting export inquiries, which we are meeting very happily, and we are investing in the German company. So we have brought in equipment which will reduce the cost significantly. So we are well attuned with the management in that company. So we are working together very closely. Of course, we own it, but it's a fully German management, and we are working well with them. So we are hopeful about it, in short.
Mm-hmm. And sir, one last and basic question is, like, being the shareholder in the company, the company is not able to deliver on anything. I understand there is no ADD and the basic custom duty also getting extended till September and all. So what keeps a shareholder motivated to be invested in Borosil in current scenario? And do you see Borosil as a takeover candidate by the bigger players in the market, which have some modules manufacturing and all, so that they could be an end-to-end cycle production which they can do in the house?
We are actually, one of the thoughts we have in our head is the possibility certainly exists for us to make modules as well. And that we are not ruling it out. We have not thought about it. We have not, it's not an active proposal, but a lot of people within the organization are asking me this question, should we not be making modules? And so it's something which we cannot rule out, but it's just a discussion.
And sir, takeover candidate, will Borosil be a takeover candidate down the line?
So we are not sellers. We are fully bullish in the industry.
Exactly.
So we are growing the company in India as well as Germany. So there is no question of our being a seller.
We are continuing to invest money in capex month after month.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital Limited. Please go ahead.
Yeah, thank you for taking my question. So the first question, I would like to know what would be the difference between the realization of our glass price and if a Chinese imported glass price in the country?
The pricing is about the same. Maybe we are getting about 2-3% extra, but the pricing is benchmarked to the Chinese prices, blended cost of Chinese goods, and our price is similar to that.
Okay. So because your realization has come off, so obviously for reasons you have stated. But now with
reasons were explained, like the Chinese have dropped the prices, the import freight rate have gone down, which is why the landed cost has gone down, and which has affected the prices.
But sir, if with ALMM and DCR content requirement, I understand the glass, most of the module manufacturers in the country are using Chinese glass or from the other countries. So don't you know, with the management getting in discussion with the government whether we can allow, whether they are planning for a DCR content in which we can use only domestic manufactured solar glass. Is this a proposal in the pipeline, or is it in the discussion with the ministry? Something like, if you can throw some light on that.
We've discussed this issue with the authorities about including ancillary products also in DCR, and it's under their consideration. And there's another matter You see, right now what is happening that there are severe delays in shipments of glass for those people who have very happily decided to buy glass from China, and it's going to impact their production. So one cannot just simply bank on imported products, because you never know what's going to happen when. And therefore, the people who are our customers, they are very happy that they bought from us because they continue to get the glass and their production is not suffering. So for the sake of a 9% cost where the total cost is only 9% of one component like glass, if they suppose decide to save 10% and buy it instead of 9% at 8.1%, and the entire production program goes for a toss, then that becomes a very expensive decision. That saving becomes very costly. So I think a lot of the customers are aware about that, and therefore they are buying some quantity from us and they buy some quantity from imports, and free market, everybody takes his own decision,
Yeah, that's true. But so the utilization level of yours is like at its peak, like you are at 85-90%. So so now with capex, as you said, so probably what I understand is to right issue, you are looking to do capex and bring down the debt, right? So capex will take time, because once you become profitable, you can go for the capex. And again, as you are looking for wind or solar as a solution to support to power internally as a captive power plant. So these, and again module, which you said that module requires a very low capex, right? To set up a module plant, probably you already have a land and you require a very low capex like per gigawatt. So if you are looking to integrate and going with a backward integration model where you have your own power, your own module manufacturing, where you can use your own glass, so how much capex you are targeting to invest in for these things in the next couple of years, while you are also looking for a right issue to bring down your working capital? So these are very significant decisions by the company, but eventually probably it should improve your bottom line.
See, this year we are planning to spend over 100 crores in capex, and this is for balancing equipment, which is required now because the type of glass which is being demanded by the customers, in order to make that, to manufacture that, we need to spend this capex. And we have the services, we have the land, we have the built-up property where all this is going to be installed. So there is no extra on that, and we have the manpower and very highly skilled engineers and things like that. So all of this is going to just make us much stronger, really speaking.
So this 100 crore includes three components. One is on the solar wind hybrid, close to 20 crores, which will be used in generating captive power. Another 20 crore is for the processing equipment, what Mr. Keruka just mentioned, and about 50-55 crore is on the proposed rebuild of the first two furnaces. These furnaces will become due for rebuild in next 1 year or so, or maybe 2 years. So we are getting ready. We are just buying the refractories and other items for that, so that we are ready for any eventuality, and we are then able to rebuild. So this 100 crore is broken up into three parts.
So this will be like
if the furnace lasts longer, we will happily work it. But we have to be prepared.
Okay, sir. That's all on my side. All the best, sir.
Thank you very much.
Thank you. The next question is from the line of Pankaj Lat, an individual investor. Please go ahead.
Hi, good afternoon, sir. I'm audible.
Good afternoon. Yes.
Okay, so my question is, in the past, Borosil used to take pride in launching innovative product. I remember 2mm glass being launched some years ago. So A, the question is, what is the traction on those products? And B, are we looking at product differentiation to beat the competition, or we are just looking at pricing as the only tool in the future?
So the 2mm which we launched in 2017, we were about 5 years ahead of the time. The product sort of started getting traction in 2022, and now of course it's a very important product and everybody wants it. So We are fortunately ready with it. We are able to supply it. The other thing is now that they want a grid printed glass. So there's a white paint which is used to print the back of the glass, which improves the power generation. And we have already implemented that. And we have been selling that. Our product is very much liked, and we are all the Indian glass manufacturers of solar glass do not have this. We do. We have it, and perhaps one more has it, but nobody else has it. And there is so this is something which is coming up, and we are spending money on getting more lines to manufacture this product. We are the only people in India, certainly, and very few in the world, who make a product called an anti-glare glass, which is suitable for use near airports. Because existing solar panels, they reflect the sun into the eyes of pilots, and they cannot land there, they cannot operate the aircraft near airports. But we have developed a product which we have also sold to Indian airports and to international airports, which are able to give you solar power without giving a glare to the pilots. So that is something new that we've developed. And these things keep on happening.
This 2 millimeter glass is now almost 20-25% of our portfolio, and which will soon become almost 60-65% by end of this year. So this is very much in requirement now. And also the other thing what we have done is to come up quickly is the large format glass, because as the demand for larger module started to become very popular, we have been able to introduce the large sizes of glass for those modules, and which is now almost 90% of the requirement of the glass by the module manufacturer. So we have been keeping abreast of the market developments and trying to supply the products as required by the customers.
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Jagadish Sharma, an individual investor. Please go ahead.
Hi sir, thanks for giving me this opportunity. I have 3 questions. The first question is, I saw in the presentation that the capacity expansion is being on hold. Why is that, sir? Because I have this question. Why is this question is, when the situation is bad and we are doing our capacity and we are ready for the future, isn't that how we should do?
Yeah, so actually the capex plan was put on hold by the board of directors, looking at the scenario where there was no visibility of a proper return on investment. So before committing funds and before raising any funds from the shareholders or from a QIP investor, one is to really see whether there is enough amount of return on capital appearing in the projection. Before that, we cannot allocate the capital. So we decided purposely to wait for right duty structure to be in place before we can move into this large project of say 1100 plus crores. So we have put it on hold, but we will review it at opportune time and take a decision.
Okay. So my second question is like, are you planning to enter into this EPC space? Because this is a new space for all the solar related players. So are you planning to enter into this space, sir?
No, we have no wish to get into that business. Our niche is in making the manufacturing of the glass and allied ancillaries maybe, but not in the EPC or other type of businesses. So we have yet to come to reasonable size of glass manufacturing, as we can say.
Okay. Any guidance for FY25, sir?
So we are doing our best, and in case the duty comes into play by 1st of October, which is what we are expecting, the situation in second half could be better from that perspective.
Okay, sir. All the best for FY25, sir. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you very much, dear investors, for your questions. We appreciate the interest which you take in the business, and it gives us initiative to continue to work hard, to continue to do our best so that we can maximize returns for our investors. So thank you very much, and we look forward to meeting you again after the next quarter.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.